Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be joining you on a Monday night to talk markets. Of course, before we get stuck into the nitty-gritty of tonight's presentation, we do need to discuss the disclaimer, which says that everything we're going to talk about tonight is general in nature and has not taken into account personal financial circumstances, objectives, or particular needs. So before acting upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. More importantly than all of that is the fact that trading and investing is risky. At some stage, you will endure losses. It is inevitable. Ultimately, you and not I is responsible for the stuff that you choose to do. The agenda for tonight is to check out, the stocks, the bonds, the commodities, the crypto, the indices that you're interested in. Anything I can get a chart on, I'll do some analysis for you, but please, can you do something for me? Can you give me the ticker and the market that ticker is trading in? So, if it could be a Toronto stock, we've had a few of those over the last few weeks. It could be from the New York Stock Exchange. It could be from the ASX. It could be from anywhere else. But all caps, please, because sometimes L's look like capital I's and vice versa. Tell me what type of setup it is. Is it a continuation setup, a turnaround setup, an aggressive setup, or it could be a combination of those. We get them too. Plus R equals R minus R. What do you intend to do with that one, and what key levels are you watching? Without further ado, let's head over to the portfolio management model first and foremost. And this is where we'll sort of frame tonight's discussion, because it will help us determine how much risk that we're allowed to have in the market based upon our risk management model, our portfolio bucket model, as I like to call it. So basically, imagine you've got a bucket and you can fill that bucket with risk. That bucket determines how much risk you can have on a particular market, and we can have it full to the brim. That's FRP, full risk position. We can have it half RP, half full. We can have it as little as a third. At the moment, on the Nasdaq Composite, we're at 50-50. Some might argue that we should be maybe back at 2/3. And look, if you were there and you've looked at that chart and you've made a conscious decision based upon all the factors, I wouldn't disagree with you. I think we're a little bit more in the balance than that, possibly because I don't believe how easy it has been in this last, let's count them now, 1, 2, 3, 4, 5, 6, 7, 8 white candles in a row. That one wasn't a white candle, but it was hardly from a bearish candle. And then that one's the first sign, really, that maybe there's a bit of supply finally coming to meet the demand that's been in the system. And this is the price that they want to do it at. So that's interesting in itself. It was a pretty convincing down move. And this candle here, well, hey, you could say, hey, Carl, that candle there amounted to nothing at all. I know, but this one was bigger and it was more severe, and it came in a more sort of a damaging place, I guess, to take out that particular low as well. But never, as we talked about before, is in the nature of olives to have pits. It is in the nature of the Nasdaq Composite to go up. So let me get a close above this level, a close in this zone. I think this is the area where there could be latent supply in the system. And hey, to be fair, lo and behold, Friday was the first point that we actually started to manifest some of that. So give me a nice big white candle in here, and I'm going to feel far more confident that this is more than just a very thin market where the default setting of it's a bull market and that demand that is just that natural ebb and flow. Supply's turned the tap off. We can say that supply was active, and we're dealing with a few more above average days. A few more, and then we've just gone, supply has just disappeared. It just turned the switch off, and in the absence of that supply, the very little amount of demand in terms of the number of shares. Now that demand is motivated, don't get me wrong, we can see the motivation there in the price, but there's just not a lot of it, and it's not meeting much supply. We know that. So if we start to see volume increase, and look at Friday's candles volume was only slightly higher than the ones that came before, but it was high, getting closer to average. And that volume increases in an area where we would expect to see excess supply, then it starts to fit, the pieces of the jigsaw start to fit together. Anyway, I think I've probably said too much about that, but you get the gist of what my concerns are. Let's head over to the ASX 200. And this is this a little bit more normal, or just a little bit more normal for the ASX? I mean, this was the same sort of supply side controlled push, serious stuff, like a serious challenge to the bull market, the most serious one we've had since Trump's tariff terror back then. Before that, really hard, really not that many serious challenges. We never closed beneath the long-term uptrend ribbon, let alone really it going orange. So, this is, I would say, a bit of an aberration of the circumstances we were in with the new president at the time. And taking that out of it, this is actually the first serious test, I think, of the bull market. And we haven't had that easy default run-up, have we? And it's largely to do with the fact that, well, some of the sectors that are struggling are the ones that have the biggest index points, so financials, healthcare, information technology, which I'm going to find any second now. There it is. Consumer discretionary. And I think I'm kind of roughly moving down in order of magnitude, property trusts. And really the only sector that has been steadily doing well is resources. I know are down day to day, which facilitated a rally in some of the others, didn't it? So that potentially explains why we haven't had such an easy run as the Nasdaq has had, just taking out previous areas of supply, like they're not even there. We're more respecting the trend ribbons, for example, the short-term downtrend ribbon, and stuck still within that long-term uptrend ribbon. But as I've said in my analysis in Market Index, look, it wouldn't take a lot. It's like one big white candle would close. It's enough to get us above that short-term trend ribbon and really change the picture here, and that would take me back from the current third back up to a half. If you've got a strong opinion on what our portfolio management should be at this time, well, let me know. And if you say, no, Carl, I think you're too conservative, I think you should be more aggressive. Santa Claus is coming. You put out that article just last week that said, expect a Santa Claus rally. In the last 5 to 10 years, we saw that it is after the really bad Novembers that actually the Santa rally has actually done better. Go a bit longer term. It's bad Novembers tend to yield bad Decembers. Anyway, seasonal analysis always take it with a pinch of salt. Okay, we're going to whip around the grounds and see if there's anything to push us off this rather tenuous position we're in, isn't it? At half and third respectively. No, we're not confident in those positions. Well, at least I'm not. Let's head to the Russell 2000. And, holy doy, look at this. It's like that dip never happened. I would say almost half the bars. It's pretty close to half the bars to get back up than what it took to come down. That is strong. That is V-shaped by any measure. And just nudging back into 25.42. And, technically this is a more risk-on market than even the Nasdaq. So that's an impressive showing. That would suggest we're underweight stocks at this point in time. Let's head over to Europe. That's more in between, isn't it? We're not seeing anything close to decisive here, and we always do feel more confident when we have those synchronized moves among global stocks. Not on the FTSE either, and that was the one that was going gangbusters before we had that pullback. Spain. Why aren't we in Spain, ladies and gentlemen? There's many, many good reasons why we should be in Spain right now. Hang Seng. That's equilibrium now, isn't it? That's definitely equilibrium. Nikkei's still very, very strong. Actually, that looks quite solid, and the Nifty 50 looks very, very solid. Shanghai Composite very much sideways, and that's sideways now also. So nothing definitive there. I've shown you the Aussie sectors. I won't do that again. Let's move over to our base metals, and we did see also last week that the copper price has rocketed to a new high, something we've been following for a while, so probably no surprise to anybody who watches these sessions regularly. All blue sky from here, which obviously is implied by a new high. But what that, I guess, the conditions that creates in the market is we've got FOMO, obviously. You can't get here without FOMO. We've also got HOFU, which is holding on for upside or further upside. And we're not at a point yet where the market has this feeling like, oh, that's it, that's all it can do. Right now, anything's possible. If you're demanding, you're still thinking, geez, this could go to 20,000, could go to 30,000. If you're supplying, you're thinking the same. You don't want to supply because this could go to 20,000, this could go to 30,000. And whilst we're in this phase, it's the magic phase. Anything can happen. When we get the big peak, the big exponential move, big peak, and that's when the market's mind starts to be afraid and turns off. Oh, maybe that was it, at least for a while. Aluminium we saw still looking very, very strong. Iron ore has popped up. I know it's pulled back the last couple of days, but that's on the right side of the trends, I'd suggest. On the wrong side of the trends, nickel, lead, tin, magic, and zinc still pretty good. So what's that? 4 of them. They're looking pretty solid. And that's consistent with expectations of stronger global growth down the track, isn't it? That obviously is supportive of that real estate. No, that's supportive of the resources sector. Also supportive of the resources sector is the chart of lithium. Carbonate, today's candle is very, very timely indeed. It was starting to look a little bit challenged, a little bit, vulnerable there at that short-term uptrend ribbon. But lo and behold, like if you're going to get a white candle popping in, where else would it pop in after a short-term pullback but my short-term uptrend ribbon? Now, it's one candle. Another one like that would give us greater confidence that we are seeing that dynamic demand to manifest itself in the market in a strong and meaningful way, and we could move back towards the hundreds. But let's see what happens, because we are lower peaks and lower troughs at this stage, so that is not accounting for an easy demand side controlled move. It's pointing perhaps a little bit more towards equilibrium at this stage. But otherwise, there's nothing too sinister going on in that chart. Let's head over to the trading view screen now. We'll finish off our whip around the grounds. Oops, that's not it. That's you lot. You can see yourselves now. And what I need to do then is switch over to maybe that one and head over to futures at Forex and down to silver where we normally start. And very, very solid. I can't fault that. I know Aussie precious metal stocks, we talked about this last week. I mentioned something like if you are going to bang your head against the brick wall of owning Aussie silver stocks, please understand that they don't always move lockstep with the silver price, and they are going to be volatile. And that's exactly what's happened during the week. And probably when you think there's no point holding them anymore, that's when they'll catch up to the silver price and you'll regret it. Anyway, I'm sure we'll look at a few of them tonight to make a more educated guess on those. But for now, the silver price is exemplary, isn't it? Can't fault it. Gold price, a little less so, but still very strong. No reason yet to doubt it. No strong reasons to doubt it. We haven't looked at palladium and platinum for a little while. But I think, if the whole complex is moving up, that's also a good sign. And there's nothing too sinister in either of those other ones to tell us that precious metals as a theory isn't a place where money is moving into. Looking at high-grade copper, starting to reflect that move in London copper and iron ore. We said a couple of days down, but otherwise looking strong towards the top of that trading range. Not looking strong, or I guess the opposite is looking weak towards the bottom of its respective trading range, is uranium. Don't want to see it break beneath that sort of 75 level. That would be problematic. We haven't looked at this one for a little while, but that's the European natural gas. And all this talk, there was talk about, they've got looking to phase out Russian gas. It doesn't seem to be a gas supply problem, does there? Based upon what the price is doing. In Europe, this is the US natural gas. That one is actually looking very, very solid. But having said that, crude oil, US crude and Brent crude are doing nothing at all. Newcastle coal futures, that is thermal coal, also not doing anything, and the little rally, very tentative rally we've seen in coke and coal has had a little bit of a pullback to start the week. Let us finish off this whip around the grounds with a quick look at the bond market. Last week we noted that how steeply Australian short-term and longer-term yields have risen, and that this is one of the major reasons why our share prices are being suppressed. It's hard to have a strong share market when their alternative, their risk-free alternative, is doing so well and now offering pretty much the same yield. I mean, we're at about a 4%, unfranked yield. So without franking credits, we're at about 4%. Adding franking credits, you're probably getting closer to 5% on the ASX 200. So if you're sort of a short to medium term trader, 2 years, you're getting it the same yield, risk-free. Obviously, no capital upside, but at the same time, no capital downside either if you hold to maturity. And if you're a longer-term investor, hey, 475-ish is looking pretty darn good to me without any risk or care in the world, because we can be reasonably sure that the Australian government will pay you back. Having a look at some of those Japanese yields, we can see one of the main reasons. This is just pure conspiracy theory from me. I don't know if you hear it from anywhere else. Maybe you do, maybe you don't. But this is one of the big reasons I think our local financial stocks are struggling a little, because Japanese pension funds have really done a trade, not just on our market but globally, where they buy, they borrow very, very cheaply in yen, and or they can't get the same sort of returns in yen, so they transact in, change their yen into other currencies and go and buy high-yielding securities, low-risk high-yielding securities. Could be government debt, could be our big four banks, and just suck up that yield and send it back home. But if they are getting better yields at home now, then some of that money, not all of it, but some of that money, because 1% is not 4% or 5%, is it? But relatively, it's better. So some of it will start to head back the other way. Let's have a look at the US yields. We potentially are going to have a 25 basis point interest rate cut this week, but not seeing that potentially in the 10-year chart, nor really in the 2-year chart. So we would say that's factored in, and it'll be sort of what happens at the margins in terms of commentary. And the dot plot also will hold sway as to where those go. We don't want to see precipitous decline in here. Just a gentle, gradual sideways is perfectly okay. Even a gradual up is okay, because it means a strong US economy. We don't want to see this rocketing. If this rockets, there's something wrong with the whole system. That's bad. Rocket is bad. Gentle up is okay. We can still deal with that. Sideways, perfect. Gentle down, fine. Catastrophically down, bad. that's ladies and gentlemen, that's how the bond markets, the yields and the bond market impact stocks. Make sure you wrote those down somewhere. Okay, let's head over to your offline request. That's the whip around the grounds. Did I miss anything? Bitcoin? Maybe. Sometimes we look at Bitcoin. It has had a little bit of a bounce. Enough of a bounce to be interesting? I don't think so yet. Let's head back to the candles, because we've got them. Look credible. A little bit of volatility. Quite a bit of volume. We always want to see that. A decent signal here, could have been better. I mean, if you blend those three, it's starting to look better. A nice hold, nice hold, high trough, coming good. Look, close above the short-term trend ribbon, starting to look very credible. I certainly wouldn't want to be in my shorts anymore if that occurred. So, as for taking cheeky longs, it's a high-risk setup, isn't it? It's an aggressive setup. We're beneath the long-term trend ribbon, and the short-term trend ribbon is still down. So I'll let you make your own call on that, but not for me. As I said, let's head back over here and do your offline requests. Starting with, just finding my place, sorry, FML for Mick. Focus Minerals, obviously done a bit of work on it in the past. We said equals are here, but a smaller amount. I think I said something along the lines of, if you've got a reason to do it, I mean, if there's a clear signal there, do it. But if it's not a really strong signal, then just don't do as much as you normally do. I said, go check the tape. I would have said something like, if there's 1,000 shares, maybe not a couple hundred shares off, or no more than that, or even as little as 100 shares. Seems to have been the right course of action. And where are we now? We're kind of here. What about today? Well, we've got a couple of supply candles, haven't we? I mean, that one there are the two most credible ones since that very strong demand side candle. I know that's stating the obvious, but the less obvious question is, okay, are they enough to actually do something about it? Are they as solid? If we're blending these together, are they as disturbing as that one? Oh, look, perhaps. Probably not. They're not ideal, don't get me wrong, but are they smoking gun, take risk off the table? No, they're not. And, I'm not trying to sit on the fence here, but in fact, I don't think I am sitting on the fence. I'm saying, no, they're not. For me, they're not enough. Maybe this is the fence any bit, but I can see there's supply there. Blind Freddy can see there's supply there. The question is, do you want to be pushed out of your position? And yeah, I'm going to say, I don't think so. But we need to find a place where that's going to be the case, because we can't hold on forever. Let's, you can hear the size, because I'm really trying to figure this one out for you, Mick. And inevitably, the first line I draw of the day is always that stupid dash line. I don't know why, but anyway. So that's where we are. And we are coming down. We don't know where this next segment is going to end, so we'll just end it there for now. And if you didn't follow why, those are the peaks and troughs. Well, through here, we're higher highs and higher lows. So each candle's high is higher than the previous candle's high, and each candle's low is higher than the previous candle's low. Okay, so we're a short-term uptrend segment. Even on that day. On this day, we don't know that that's actually the top, because we haven't started to come down the other side. And so on this day here, we get lower high, lower low. There's always going to be a lag of one candle in technical analysis if you're doing it properly. This is an inside candle I put to you. Its high is lower, but its low is higher. So we ignore it. It doesn't exist. There's no, don't even look at it. This one here is, I'm going to put to you an outside candle of the previous one, but because we ignored the previous one, you just skip that one. So you just go, well, that's a lower high and a lower low again. So this one, we can be sure, this one's still part of the downtrend because we've ignored it. This one is confirmed to be part of the downtrend because we're a lower high and a lower low. And then we get to this one, which is a high high and a high low. So we start an uptrend segment. And uptrend segments, by definition, they could last as little as a day, because the next day is down, lower high, lower low. I think hopefully you can't hear the cat meowing in the background. Maybe you can. Agreeing with me. Did we close beneath that low? Let's have a look. But I'm just going through a checklist here. I don't know if you've realised this is the checklist we do every time when we look at a stock. That low there, 290. 290. Today's close. 290. So we haven't got, technically it's still holding. All right, little lowish, as tiny as that low shade is showing, there was still some semblance of demand in there. All right, so we have some rules. If we close beneath the last point of demand, why is that not working? There we go. I just want to draw it so you can visualize what it might look like. If we were to have something like that, okay, then my model says you need to manage your risk. So we're going to go minus R if that was to occur. It might do this. It might close not only beneath the last point of down, it might close beneath the short-term trend ribbon, and in which case we're going to stack these. Okay, so we're 2. If this is a really bad candle, I'd go another step. Okay, so that we could get to the point where a bad enough candle closing beneath that point of demand and the short-term uptrend ribbon could actually take us out of the trade or a very large portion of our risk associated with it. I think that's it, Mick. I don't think we need to do anything else. LRV, Larvotto, which is it's frustrating, isn't it? Because it was just started to look quite solid, and then it's just printed 1, 2, 3, 4, 5, 6 black bodies in a row. In an otherwise pretty benign market, and that takes some concerted supply. That takes some decent, disciplined, motivated supply to do that, I think. Look, they've only got it as far as a short-term trend ribbon. They're not interacting. The frustrating thing about this is that that point of demand is quite a ways away, and you'll actually get there only after you close beneath the short-term trend ribbon. But it's the same sort of thing. Let me draw the potential candle in again. I think that's instructive, and we go black, black, and we can say minus R for that. Caps lock, please. And if it were to be something like this, we would stack it, and if it's a nasty enough candle, we'd stack it again. I mean, that's what we're looking at here. What do we do today? Exactly today. Was there a reason to get some out before this? You could argue that candle is nasty, but there's really nothing happening here. It just looked ebb and flow, thin market. You can see thin market, motivated seller. In and of itself, maybe not enough just by itself. I think once you get to here though, so supply, tried to rally. This is the difference. So this is the key candle, tried to rally. And the best the demand side could do was get that far back into the range that's been created prior to that candle. So that's your first question mark day for me. If you've gone minus R on that day, I wouldn't complain, but even then I'd say, well, even then that's being a bit pedantic. That's a nothing day. This is your next potential if you're a real chicken sort of day, because all things considered, it's still not that bad, right? But if you're going to manage a smaller fraction, why that day? Just reiterating, supply, tried to rally. Supply is strong now. Here, tried to rally. Supply is strong. Took out the low of that candle. So they're not just random events here, okay? They're actually really, really clear and really important. Supply is in, supply is confirmed. Demand really didn't have much in response. Demand had a crack and then just couldn't withstand. And then that's where we are, because that, of course, doesn't actually exist yet, okay? But I'll just put it back there. We'll come back and we'll see how it turns out. Let's go to Weebit, which is Nick's third and final, and this one's for a potential turnaround, a continuation turnaround. Obviously, it's continuation because we have this, and turnaround because it is bouncing off the long-term trend ribbon. Not terrible, but I think with that upper shadow, and in fact a bit of a double upper shadow there, there's still plenty of latent supply in the system, I think, working its way. It looks like we're starting to deal with it. Like you can see some improvement here, but I don't think there's enough for me. So yeah, until I see something really solid to say that the supply, there's clearly supply beating back this demand side challenge. So the logic suggests that, well, if the supply is there, I should be tentative or I should stay out. But if the supply is gone, well, that's a good thing, isn't it? The supply is gone. The demand side may well have more impact on the market. So for me, I could only contemplate plus R until I see such a demand side candle. Until then, if I had it, I don't think there's much reason to have it. I could, go equals R, but we're not minus R at this stage. Okay, let's get to your online requests. Thank you, everybody who's online and being very patient there. Adonis is always first in with his US stocks. We'll do those at the end. Let's go Sonia, who's got AYA, which is on the ASX. Thank you, Sonia, for following the convention there and looking at it as a continuation pattern, which indeed it is. And Sonia's looking for a potential plus R. And yeah, I agree with you. I'm pretty sure I shortlisted this one today. I don't recall shortlisting it in this move because I don't think I had enough reason to just at the stage because of the supply zone that is here, and I think quite obviously there as well. So that's what we're worried about. And you can see even today that supply began to manifest itself in the price action with that upper shadow, almost like clockwork. So I think again, this is all very logical now. I mean, if that's what is bothering us, then if it's no longer there, if that demonstration of supply is no longer there, and the opposite and consistent with that would be a demonstration of demand in that zone is there, then it's far more safer to go in, right? So what do I mean by that? Well, if we get a demonstration that demand is active, motivated, powerful, that's not supposed to be yellow. I don't know why it's yellow. Something like that, for example, that would be impressive. Not only is it telling me that demand is motivated, powerful, showing intent, it also shows me that the supply side, that latent supply we were worried about in this zone, has been consumed. If we see a candle that looks just like that one, it really can only mean one thing, and that is the supply in there has been consumed. I don't know why that's not letting me do that, but anyway, here we go. All right. Until then, I'm happy to just cool my heels, because we may get something that looks like this. And let me just put that down there for a second. Is it feasible for that supply to start to overwhelm the demand that is pushing back in? Yes, demand's pushing back in, but how much supply is up here? So for me, it's a little bit, too early perhaps. Aggressive is probably too strong a word, but I just want to see confirmation. Okay, so I'm worried about that. I want to see that. And then for me, unequivocally, this will be a feature trade. It won't just be a watch this trade, but let's say plus R on the next demand side candle that closes greater than, it's going to be more than 380. It looks like kind of a 390, and I can tell you exactly what it'll be if I get that high there. So 391. Let's say 391 or better. 391 or better, greater than or equal to 391. Can't be any more specific than that. Until the meantime, we haven't written this at this stage. If I had this, absolutely, I'd be happy to have it right now, and I'd be happy to hold on to the risk that I had. Okay, let's go to CTT from Michael as a potential turnaround play. And I think we looked at this. I've looked at this recently as well. Maybe it was in the Wednesday session, I don't know. But this candle's ringing a bell here, so I think I ran it on that day as a feature chart, and I am just trying to jog my memory here, so bear with me, because if you're wondering what I'm doing, I just want to confirm this for my brain, that is actually the case. So I'm going to go here, and it's the candle of, there's so many stocks, ladies and gentlemen, I can't remember them all. 4th of the 12th. So that will be the 5th of December chart watch. And if I go Control F, Cettire, and indeed it was, my memory is serving me correctly. So it's there in the general watch list, and it is also a feature. Okay, so maybe that's why you were asking about it today, Michael. So I ran it as a feature chart on that day there. All right, so let's frame this conversation based on we're here, we're plus R on this day. What do we do? Well, that's actually quite easy, isn't it? We're actually not doing anything today because there's no reason to. So, is that a supply side event? Is that something we talked in the first example of supply side candles? Which ones are significant? Which ones aren't as significant? And that's not even a supply side candle. So on that day there, nothing, equals R. Today, a little bit more supply coming in, ebbing into the system. I wonder if it's got something to do with the dollar, just sort of lurking away, nagging away at people's minds. You know, we've got people that got in at 30 cents. They're triple their money. We've got people who got in around about 50 cents. You know, they're nearly double their money. But it's very small, isn't it? It's not really that sinister. I wonder if there's something just out here in the corner of our eye. Maybe it's a level from the past where there was a bit of supply. Some demand-supply interaction. So we have some supply trapped in the market from that time. And now they're finally, look, from March, April, and now it's nearly Christmas. And they're finally getting what they wanted, which was all this time just to get back to bloody break even so they can finally get out of Cettire. And we're seeing a little bit of that manifestation. So when we're seeing this happen in a logical place, I don't think we're too fussed about it until we see something that we really need to be fussed about. So for me, this one's quite simple. Where equals are, no reason to do anything else. If you don't have any risk on this, should it throw in a solid demand side candle, then no reason why we can't go plus R. I would counsel, however, that this red line is probably here for a reason. Let me go back. Yeah, look, it is there for a very sound reason, as is all of these other ones here. So this one and this one, we're moving into pretty decent whack of supply. Okay, so whilst we say, well, if we have the signal, certainly there's no reason why. That's the wrong phrase. If we have a signal, then it is a candidate for adding risk, but it would then need to pass our reward to risk filters. Okay. Let's go to Mark, who's got SRL. Oh, wow. All right, well, do I need to ask for a show of thumbs on this one? Okay, well, should we do a show of thumbs? What are we doing? Thumbs up, add risk. Thumbs down, take risk off the table. All right, there's a thousand thumbs down. So good, but this, look, as devastating as that move is, because on Friday it was looking bloody amazing, and this is the nature of the beast now, isn't it? 2025. This is how 2025 has played out. When it's looking the absolute best, isn't it? Boom, like next day. It's not just give me a gentle little, throw in a couple of upper shadows, just a few modest upper shadows at a big round number, and a couple little small candles, and then a little bit of a black candle, short-term uptrend catch up for me. No, it's just black candle, and you're giving back a bit of profit. But at least we all know what needs to be done here. What sort of a minus A? Is it a bigger one or a smaller one? Well, for that, obviously the big candle, so that's straight away giving it extra weight. But for that, we can go down here to tell us, well, what is a big candle? I mean, it looks like a big candle, but how big is it? Well, we can tell here now. I mean, subjectively, yeah, it's a big candle, but objectively, well, it's about 2.5 times the average. And that average has been increasing, obviously, with the price. So it's a substantial candle. It's the most substantial one we've seen, really, in that look-back period. We should go normal. In fact, it's still, from our default zoom, the most substantial candle. So it's a big deal. What about the volume today? Actually, the volume's only average. Yep. What does that mean? What does it mean you get a big black candle just on average volume like that? I mean, I think the day before, pretty solid. Lots of demand came in, lots of supply got out. We know that there was lots of volume. Demand side largely won the battle. There was a bit of supply winning towards the end, maybe a little bit of a precursor to today, but I don't think that volume there is so nasty. Today's, so saying that there's no real volume signal from yesterday's candle. If anything, supply removal looks quite healthy. Today's candle, just average volume, average amount of money coming in, potentially trying to buy the dip, thinking it's cheap. So it wasn't wholesale, people trying to buy the dip. And the supply that was there wasn't a huge amount of supply either, but they were very, very motivated. So it's one of those, again, 50-50 sorts of deals with the volume. So if we can't definitively get a volume picture, we just defer to the price action, say, well, supply was really motivated. Demand clearly wasn't to stop the rot or come in droves, and therefore there's enough in there for us to make this a pretty decent sized minus R. So is it a half R? Is it more? Is it getting out 2/3 and just keeping a third? I think order of magnitude, that's more like what it is. You know, I don't think you're going to hold more than half your position on this one after that candle, if that makes sense. But the amount of that is up to you. It's not up to me. My job is to teach you that's a really important day. Why is it, and why it's important, and then it's, you know, and that we need to manage risk. But then it's up to you to determine the magnitude of that. Okay, let's go to and just reading the rest of Mark's comment. Minus R on today's candle. Yes. ASL. Of course, I can't tell you what to do, Mark. You've got to do what you've got to do. And this is exactly what we meant by flippin' silver stocks. Flippin' silver stocks. Because what happened to the silver price? Like, nothing happened in the silver price. And yet, flippin' silver stocks, right? But this is par for the course. And it just makes me wonder who owns these stocks, right? There's obviously punters trading in, trading out, but the long-term holders that are in from ground zero, just their lack of faith, isn't it? Their absolute freaking lack of faith in these stocks, because they're all like that. You know, insiders, brokers that are pushing their capital raisings, you know, they're conducting their capital raisings that tend to get very favourable pricing, selling into strength rather than holding on. And it's just taking the next punter and the next punter and the next punter to push them up. When silver finally gets going again, that rush of punters takes it up, and then boom, it takes one little black candle in silver or half a black candle, and bang, this thing's down 10% in a day. Like, where does that come from? But I did warn you last week, and I think I've warned you many, many times when it comes to silver stocks. They are flippin' hard. Okay, what to do with this one? Well, forgetting it's a silver stock, and that's what we should do. You've got a big gap and run. We've tried to hold the short-term up trigger, and that's positive. The sawtooth pattern kind of tells it all. Was there a warning before this that maybe we should have managed our risk with those two? No, absolutely not. They are nowhere near enough. You could argue, well, they're manifestations of the point of supply, and therefore there's good reason there. You know, clearly on that candle, the supply was working its way into the system, and therefore, based upon that very, very obvious supply, we should have been managing a risk. And I say, man, you were Johnny, was it Harry Hindsight? Johnny come lately. Harry Hindsight, you are, because on that day, all you could really see, it's some supply coming in. That's it. Nothing sinister, nothing all that sinister, and even on the next day. So no, you got to here, you're here, and you've done nothing, and you're annoyed like hell. What do we do? I don't bloody know. How am I supposed to know? Why do you keep asking me every Monday night, ladies and gentlemen? What would I do? Adonis is going thumbs down. Manage some risk. What do you reckon? Minus R? Or is it just a silver stock? It'll be back up again tomorrow. So the market's going to change its mood. I don't know. Sorry. Gap and run. Big black candle. Yeah, I think I have to go that. Just as a precautionary measure. And if unsure, you know, take a bit off. Because this gap here is still black. That's the thing. So, yeah. And if I think Adonis is kind of saying this, chirping away in my ear there, like by conscience, saying, Carl, just apply the model. What would the model say? And the model says that, you know, that's a big black candle, and big black candles on volume. Actually, there you go. Should have just listened to Adonis. Supply system. Big sell-off. Lots of demand getting smacked up by lots of supply. Yeah, lots of demand, like trying to buy the dip, they just got smacked. A little bit of rally at the short-term trend ribbon, but probably not enough. So, yep, minus R for me. But, yeah, bloody silver stocks. What can I say? Let's go to the next one. We're going to move on. Michael's saying minus a third, but expected due to cap raise. Well, there you go. So again, I can't know the news of every single stock we analyse, but how when you compound silver stock with greedy management, like just the greediest management, jittery management, that my stock's going up, I could wait until it gets $3 or $4 and do my capital raise, or I could just do it now, but just pop back up again, and God, I didn't do it here, did I? Like, is that not the most mug punter way of looking at the market? Like, they didn't do the capital raise here, right? And how's management thinking now? Oh, shit, we should have done that capital raise. Why didn't we do the capital raise? I'm going to get on the phone to Bell Potter right now, or Shaw's. Give him a call. Oh, it's going back up. Beautiful. Cap raise. Bloody typical. Okay, let's go to WC8. Anyway, somebody got it. Somebody got a deal there, I guess. Let's go to, and you know, they raised a bunch of cash. That'll keep them going until the next silver boom, won't it? That new, I'm sure there's a plug-in hybrid, you know, BMW SUV that needs to be purchased. Another wing on the mansion out in Cottesloe or Peppy Grove. Let's go to Zoom Normal here and double click that one. Yeah, still looks pretty good to me. It's been in the list a few times recently. Hasn't given us a lot of reason to doubt it. You know, a couple of dodgy candles here, but you know, never really threatening anything at all, to be honest. And back up again today in a strong lithium sector. So at least it's participating. What we don't want to see is it not participating on a strong day for the broader lithium sector. So could have closed better. I don't think I'm plus R on today's candle as it is. Certainly equals R, no doubt about it. Very happy with that. And all I'm waiting for is next demand side candle for that plus R indication. But this one's quite simple. If you're wondering why, long-term trend is not down. And that's the rule. It just has to not be down. So it could be neutral or up. Short-term trend is up. Have we made peaks above the long-term trend ribbon? We have. We made several of them, even though we tested it back here. Price action is the better part of rising peaks and rising troughs. There might be a little dink in there, but for the most part, it's okay. And we've got a predominance of demand-side candles. The next points of supply up here for those playing along at home and in here. And on supply-side candles into either of those respective zones, I think don't ask too many questions, manage some risk would be my opinion. Let's go to CSE. What's the CSE? CSE 9 for turnaround play. CSE. I don't know what the CSE is, but we'll find out when we get to the international stocks, I'm guessing. CSE. CCX. I thought I knew them all. Okay, turnaround play, City Chic Collective. It has come up, and I want to say that I ran it. I think I shortlisted it today. In fact, 100% I shortlisted it today. So that by default means that it's in, you know, if it's going to be in tomorrow's watch list, it's plus R. And I'm pretty sure I put it in on this morning's candle, so it was plus R there. And then I think I ran it also on Friday. So those are all signals. And happy to stand by today's plus R. It's a turnaround setup. We did get the dink occurring in the ribbon, but then it closed above closed two times above the top half of the ribbon, which means that when we look up, right, now that we're over halfway through the ribbon, we look up to be on the ribbon. So it becomes less aggressive, it becomes more turnaround, but it is on the cusp of the two. Now I think quite clearly a turnaround setup. Looking at a point in the past that could cause some problems in the future would be up here, but that's miles away, sort of 16.5, isn't it? So happy to see where that goes in the meantime, but higher risk play given that it is more of a turnaround setup. Is the volume strong enough is the question there from Andrew. Well, yeah, I mean, today's almost irrelevant, isn't it? Because yesterday, I'm going to say that's strong enough. There, that's pretty darn large. Interest, changing the guard, a big fund manager finally getting out. You know, why is that important? Well, possibly the final tranche of shares from that fund manager that's been selling that whole time, possibly. Okay, let's go to SKE Nasdaq. Okay, we'll do that in a little bit. Rio Tinto on the TSX. Now, it's not our Rio, so I guess I'm going to look over there, Peter. So they're a bunch of overseas ones. We'll worry about that when we get to those. Far easier to play commodities directly than the miners, says Adonis. I agree with that statement. Yes, absolutely. I mean, if you had just used, for example, a CFD or an option or a future or a combination of those to just trade silver, you would have had such an easier run, far fewer headaches, and no capital raises. Silver's not going to go, capital raise, I've gone up, capital raise, it's just not going to happen. TER for a turnaround. It looks like some sort of corporate action going on here today. I saw a substantial shareholder notice come through, somebody moving from 11 to 20%, so maybe something going on there. Not that it matters for me, I'm just providing a little bit of background context. All that matters to me is the chart. And yes, we are indeed now in turnaround setup territory. The important candle I feel is this one here. We know that as such, and that in fact is the first potential plus R on the basis that it also has closed above the midpoint of the long-term trend ribbon, which is, you know, give or take where I've drawn the arrow coincidentally. So that is plus R there, and let me point to it in a better way and annotate that with plus R, which frames the more recent candles. Okay, would I add risk on the basis of today's candle? No, I wouldn't, because the upper shadow is telling me that we're finding supply, a bit of supply also showing on this day and on this day. So nothing, these things aren't going to turn around. They're not just going to rocket straight back up. We've got dead wood all the way back up now. Okay, so that supply can manifest itself anywhere. Certainly through here, keep an eye on that level. A big supply side candle into that level. I wouldn't ask any questions. There's a little bit of an area here, but I think it's pretty minor. And maybe that's what we're seeing today. Just trying to get that completely horizontal. And if I draw, I probably should have drawn it as a box, but you kind of get the drift there. I think that's what we're seeing today. A little bit of influence from that. So what's the answer to it? We've talked about this a few times tonight. It's kind of the theme of the evening. Well, the way we know that that supply has been dealt with is to see a definitive demand side showing in the supply zone. It tells me that supply has been dealt with. It doesn't have to be that big, but you know, anything like that. And if I was to see that, then I could happily add some risk on that candle. But until then, happy with the amount of risk that I have on this one. Next demand side candle on that one. And in the meantime, still comfortable right now at equals R, if I had it. Okay. Let's go to, and yes, you're quite correct in your determination there, Michael. That is a turnaround setup. CSE is Canada. Is it Canada the TSE? I'm happy to stand corrected there, Robert, but I think it's a TSE. Let's go to Haraju, who's got M17. Now, this is one that I haven't heard of for a very long time. Mach7. Know the stock well. I mean, it had a period a very long time ago when it was doing very, very well. And I remember it from then. Haven't come across it for months, dare I say years. You can see why. I'm also guessing that the liquidity filter is the main reason why it hasn't come up in my short sell list. And same reason it hasn't come up in my long list. So you can still see 0 there. This is the day it becomes in play. It's the day it's blasted through the top of the long-term trend ribbon. It's blasted through, it's tickled that supply zone there, and it's an important zone from the past. You can see through here. Extend that across, okay? But got through it just with relative ease, didn't it? Very, very strong. This looks solid to me. I can't fault it. It just keeps going. I know it's a bit of a ways away from the light green ribbon, but I think it's worth having some risk on. That's the setup. Let's have a look at reward to risk. There's some old points of demand in here that absolutely 100% nailed it, became a point of supply. How good's that? And I think we need to extend that across and just keep that area in mind. So if we're going to get in here, so we've gone past the setup. The setup is unequivocal. It's just straightforward, plus risk equals risk if you've got it. But we don't want to spend too much time on that determination because we've got other stocks we need to do the analysis on. If we do risk reward on every stock, we'll never get to the end of this process. First pass is find the best setups. And once you've narrowed that list down, you've only got a few. It doesn't matter if you spend more time on a few stocks. It matters if you spend a lot of time on a lot of stocks. It doesn't matter if you spend a lot of time on a few stocks, but it matters if you spend a lot of time on a lot of stocks. So, we would take this through to a second or third stage where we start to work out reward to risk and compare to some of the other setups. Now, for me, under here would be a point of no return. I mean, if the price was down there 100%, I must have managed my risk at least some by that point. And if I'm getting in here, we can get an idea of what my potential risk is. Okay, and can I make one-to-one reward to risk on an entry around the current price? And I think it's going to be very, very tough to make that work. Okay, so I'm not telling you not to do it. I'm just telling you consider some of these items, characteristics, if you will. Is this guaranteed to stop there and limit our return? No, it's not guaranteed to stop there. It could blast straight through it. It's blasted through the other ones. But you have to, you've got to have something to peg your reward to risk to. Let's go to Haraju's next one. Actually, they're US ones, and then we've got a bunch of everybody's into the Toronto Stock Exchange now, it seems. So we'll head over there. I'll keep an eye on the ASX ones, and if they do pop up, I'll come back and do them. But we're going to head over to the TSX, where people have got a few to look at today. We're going to start with Peter's got. Okay, Peter's correcting me here about the exchanges in Canada, telling me that has 3 exchanges, at least 3, the TSE, the CVE, and the CNSX. Now, can I point out, Peter, that none of those are the CSE? But one of them are the one that I said it was, which is the TSE. Okay, let's go to Robert. So there's a different person. So Robert was saying CSE, and then Peter's coming in with the other one. There you go. So Peter's maybe saying that Carl might be right on that one. Let's go to Peter's got the first TSX ones. And I've seen TSX. I've seen that, but I think it's called the TSE now. I think the TSX is the old name, and then it became the TSE. But splitting hairs. Now, Rio on the TSE, I didn't even notice that. Rio 2. Okay, yeah, there you go. Oh, much better than our Rio. That's a cracker of a chart, Peter. So thank you for bringing that to the group's attention. Very solid. Dare I ask what it does? I know I don't care. And I didn't ask you to write it in. You didn't write it in. That's fine. But I'm just curious now. I'm guessing it's like a silver stock or something. But yeah, it looks pretty solid, doesn't it? So no complaints from me. I just want to check the weekly chart to see if there's anything out there. And there isn't. It's blue sky, which makes me like it even more. A few black candles, and I'm being really picky here, and this is I'm simply pointing them out so that when we look at other stocks that are of this ilk, we can start to compare between them, because ultimately we need to narrow the list down to just a few that we can trade, because we can't trade them all, right? We've only got so much capital. So if it sounds like I'm being really picky or nasty, I'm not. It's just, well, let's identify some of these things as a basis of comparing and contrasting. But otherwise, no, look, in and of itself, on its own, it looks very, very solid. So it would be plus R for me. Almost not even worrying about that last candle. It's so strong. But let me just cover my assets and say, look, certainly equals R. But for plus R, let me just wait for one more demand side candle just to confirm. Because we've had a couple, haven't we? We've had 2 little and tiny insignificant supply side candles, but they are there. So let's respect that. Okay, going to your next one there, Robert. gold says, sorry, Peter, going to Peter's ones. Peter confirming it's a gold stock. And the next one is SKE. Oh, that's Nasdaq. We'll do your other Toronto one. PGLD, which with those letters has to be a gold stock. P2 Gold and the name. Oh, I like this one. Great last few candles. Nothing goes up in a straight line. I'm guessing this high here is about 50 cents. So if we go here, data window, high is 51. Saw it shadow at 50 cents, pulling back. Let's go to the weekly chart. Is there something interesting at the 50 cent level? Not particularly. I mean, it was an old point of demand here, but you know, I don't think there's any other reason apart from the fact it's 50 cents that it should be an issue. A little bit of a level there at 60, but not as significant. Right? It's not a huge major peak. It's just a regular peak. And then certainly this is the main show. This is the big game up here at 80 into sort of 83. So on that basis, you know, I think we'll find obviously better reward to risk points here. No issues with reward to risk to me. The setup is exemplary. I can't fault it. I know there's this big point of supply up here, and it is an important one, but we've just come back so well that this is a plus R for me. Nothing else is required. Just plus R, well, I guess I could add equals R if you've got it, and you don't have room for any further risk, and you just wanted to sit on that one. Very happy with that one. So thank you for sharing those two with us, Peter. And let's go to the US now for your third one, which is SKE. Which I know you said Nasdaq, but I'm guessing that's it. There's Skeena Resources, and that looks very good as well. So let's go to the weekly chart and see if there's anything outside there. And what have I done? Days, week? No, not at all. That's looking even better to me now. The question is, do we want to wait for a demand side candle? Look, I don't think you have to. Look, it's had a little bit of a pop here. Maybe there's a little bit of a rotation, but it's really, really quite mild. Let's go plus R. I'm going to say plus R. Well, I'm going to say equals R first, it seems, and then plus R on that one. And Peter, 3 from 3. Very, very solid setups, and knowing Peter's sort of penchant, it is going to be a gold stock bonanza on those three, I'm guessing. All right, let's go to, now that we're in North America, we'll head over to Artrya, who's got two over there as well. SND is the first one. Smart Sand. I like the sound of that. What is that? What's going on there? Let's go weekly chart just to see if it's hitting a level that might mean something from the past. And it's getting pretty close, isn't it, to a pretty major level up there around about 440. And it's a long, long way away from the green ribbon. But it looks solid, and it's probably a very strong probability it'll get to that 340. I can't say what it'll do after that. It might flame out. But it is a picture of demand side control. So look, to the letter of the law, my model is absolutely plus R, absolutely equals R if you've got it. Certainly if you've got it, then there's no reason to do anything else with it. I wonder if you do have it. Artrya, let me know if you're already on that one. I mean, certainly if you're monitoring US stocks, it's got my model all over it from all the way back down here. He's on it. It's wonderful. Okay, so the equals R, I think, is the one you're more interested in than the plus R. Me personally, I've seen a few other ones already tonight that are just a bit closer. They're very, very strong setups, 10 out of 10s, but close to the green ribbon. I would add risk to those before adding risk to this. If I was to add risk to this, it would be to scratch an itch, to just keep reminding myself that these are still pictures of downside control. I still need to take them from time to time. I still need to get a good mix of setups, but I would do it with a smaller amount than my typical plus R, just simply because of that distance from that light green zone. And we know that mean reversion becomes an increasing possibility the further away we get from that light green zone. But very, very solid indeed. Thank you for sharing that one. Let's go to Artrya's next one, which is RVMD. And it's so happy to hear that you're using this model on US stocks as well, Haraju, because I know you've been in these sessions for many, many months, probably longer, and it's just like, that's why I'm here. Is I want to hear that you're using this and you're getting great benefit out of it. And no doubt you've probably seen, you've leveraged some of the giants in these sessions, like, Perry and Jason, who show us every week these amazing setups in the USA. And, the logic is, well, if they're there, they're there. I'm going to go find them. So well done. And you know what? You've given us another one here that's as good as anything Perry's ever given us. Plus R equals R. And well done again. That's a magic setup. And I hope you're on that one. I hope you've been on it for a very long time, because it certainly had many, many signals there. Let's go to weekly chart just to see if there's anything that you need to know about, given that you're on it. And I don't think there is. So it's just a matter of seeing where this goes. And no doubt you're all over the fact that, we'll have a job to do when it gets to 100. But we're still a ways away from that. So we'll cross that bridge when we get there. Okay, let's keep going up the list now. And there's lots of comments there, so I'm trying to sift through them. That's why I'm pausing. Back to Robert's CSE9. We got there in the end, didn't we, Robert? No, that's an NYSE. There we go. Oh, aren't you? Look, there you guys stand corrected. You got me. The CSE. He's been shouting at the screen for about half an hour. Carl, you have no idea. I saw it. It's there. It's the CSE. Okay, and even Pete said, there's at least, Pete acknowledges at least 3. He gave us the 3 main ones. But there's another one that neither Pete or I are aware of, where that's the CSE. It could be like a small cap, an over-the-counter one. Let's check it out. Either way, and it is pretty neat. And I'm guessing it must be one of those sort of smaller cap over-the-counter ones, isn't it, looking at the price action? But it is coming into its own. I mean, here, complete sketchorama. But what happens? We see volume come in, and we see the candles start to make more sense. The more volume that comes in, the more sense the candles start to make, right? Volume is just interest. You get actual trading rather than just a few blips and blobs from the true believers that have been sitting in there for years and years and years, trading among themselves. Hey, did you hear it went from 0.5% to 0.6%? Something's going on. That's what the volume's telling us. And volume is fever pitch now. Massive candle, a little bit of a ways away from the light green zone, but we know we're not going to bet the farm on these types of opportunities, right? So it's a matter of just selecting the appropriate risk amount to participate. I am pointing out for you, Robert, that 18 cents might be a bit of an issue. Might be a bit of a decent issue, probably a little bit of dead wood, because 3 attempts to get through it and failed each time. But then pretty clear, isn't it? Pretty clear up into the 30s. So just keep an eye on that 18 level. 30 after that, but what are we now? 14. Okay, so if 18 does become a bit of an issue, we're a long ways away. We're going to have to, big black candle closing beneath Friday's candle. Clearly, we'd have to manage some risk. So, ideally you can get a point of demand in the way, but it's starting to push that manage your risk points so far away that we'll never make any reward to risk work. So we kind of have to make concessions, don't we? By saying, well, I'm going to be disciplined, and if for my reward to risk to be consistent on this trade and across the bulk of my trades, I have to do something down here. Here, 18, maybe not there. But look, I'm not going to tell you not to do it. I still think purely on the setup, there's no question. That's plus R. And maybe I'm getting a bit too bogged down in the reward to risk, because that's really your responsibility once you get to the end of your shortlist for that to do that work. So happy with that one. In the meantime, it's textbook, turnaround setup, isn't it? Textbook. And we have learned that there is another Canadian exchange. There's at least 4. Okay, let's go to, we've done that for Peter, and we've done that one. And we're going to get to Adonis, I reckon, and do Adonis's last few here, which are all USA stocks. AVGO. Oh, that all the time, don't I? Escape AVGO. Broadcom. I think I might have missed that. The one beneath it, that's all, on the BMV. We don't want that one. We don't want that one. Yeah, it looks pretty damn strong. Obviously, we looked at it last time, which would have been 1, 2, 3, 4, 5 candles ago. I'm guessing maybe on this one or this one, 28th first. So yeah, it would have been on that candle there. And we said equals R plus R. Look, it hasn't had the greatest of weeks, to be fair, but not enough to push us off our risk, I think, at this stage. We do have, which is a bit of a relief, I think, if you're trading it. You know, we do have a nice point of demand under here that we can start to manage our risk beneath. We don't have to wait long, and that's sometimes a relief to know, oh, look, that's, you know, worst case scenario, I'm going to start to knock it out there. You know, I'm not risking at all. So that's important, that point of demand, and it's kind of coinciding well with the short-term trend ribbon as well. So in the meantime, look, do we need to add risk to this? Hey, next demand side candle, I don't see why not. I would want it to close as close to 400 as possible, but certainly where it equals R. So let me copy and paste that over. Oh, it's tough. It's tough trying to do this sometimes. There we go. Equals R and plus R on the next demand side candle there. And that will appear on screen in a second. There we go. Double click those, click save. Let's go to the next one, which is Walmart, WMT. Oh, look, brilliant. Nothing to do there, really. Probably wasting our time by checking that, was I know from our last look. It was clear, but actually I'm glad I went there because it does demonstrate what a wonderful setup this is. Just this nice base pattern breakout. It is textbook and perfect. I know there's a little bit of a shadow on Friday, but hey, there was a shadow on the broader market as well. In fact, we can see in the RSC it's still doing very, very well there. So very happy with that one. Plus R or equals R also, and then we'll go to ULTA, which is the cosmetics and beauty brand. Nice breakout, nice gap, run, closed at 600. Saw a little bit of supply coming in because it is 600. Head out to the weekly chart. I don't think we'll see anything there either. Nope. Blue sky, clean breakout, and yeah, I mean, interesting to see. There's a little bit of trepidation I felt maybe in the index, but you know, if we scratch under the surface in some of these stocks, there's still plenty of positivity there. Yes, for me, ditto. I wonder if I can copy and paste. Probably can't. Equals R if you've got it. That goes without saying, and plus R also. I'm not too worried about that shadow because when we add back in the rest of that candle in that gap, it's the percentage from the high is still very, very small. So happy with that one. And going to Adonis's second from last one, ADBE, Adobe. I just saw your TY there, Adonis. I was trying to figure out if it was the second from last because TY is thank you, not a ticker code. Now we're looking at this one as a turnaround play. It's not a turnaround play yet because we don't have at least a neutral ribbon here. Okay, so we've still got down. So if this is pink, then it must be an aggressive setup. If this is pink, it must be aggressive. We also don't have a short-term uptrend ribbon yet. So what the model is saying is that, well, this could be like many other rallies before, that looked good for a few candles and then just faded away. Once that short-term trend ribbon turns green, it's telling us, well, it's something that hasn't happened at all in this entire downtrend. And I know you could argue, well, hey, Carl, it turned green here, and then it promptly rolled over. Well, that's why it's an aggressive setup, isn't it? That's why it's aggressive. It's not until we start interacting with the long-term trend ribbon that it starts to be turnaround, and therefore, by definition, lower risk. So no, I can't entertain this one yet as a turnaround setup because it's not a turnaround setup and it's not doing enough to be an aggressive setup either. So I'm going to keep going to the next one, if that's okay. We'll go to CRM, which is Salesforce. And that is now a turnaround setup potentially because we are interacting with the long-term trend ribbon, and the long-term trend ribbon has turned amber. Okay, we don't yet have the short-term uptrend ribbon, and some of these things are just holding us back. You might say, oh, look, why doesn't it just hurry up and just become a turnaround setup? No, it's deliberately holding you back for a reason because of what the nature of these setups entail, which is higher risk. The market has been in the mindset of thinking this is a bad stock for such a long time. It doesn't just think it's a good stock overnight. So it's the start. We've closed above the ribbon. That's important as well. All I really need here, actually I don't need a lot, but I would like to see it, is any sort of dink, any sort of supply side response. We haven't seen the supply side respond to this move yet. They've been really dormant, unwilling or unable to respond. Okay, and that's okay, that's good. But let's see what they do. Let's see if they come back in, because they have a history of coming in around here. And coming in quite aggressively too. So let's see what they do. And their actions or their inaction will speak louder than any words. Their inaction will speak louder than words. If we only see tiny little supply side candles here, or even candles with downward pointing shadows that were started out as supply but ended up being demand, it's telling you that that supply side is absent. They're not active at this zone anymore. In fact, even if they were active, we could tell through volume if it's above average volume with these types of candles I'm talking about. Yes, the supply side is trying to be active, but there's just so much demand soaking them up, and that's good too. So let us see the response at this zone, because it is like, do you really want to muck around with my long-term trend ribbon after everything you know, or do you just want to take a punt that we're going to go straight through it? So any dink in here, and then we're in a totally different world for me in terms of that transition in the market's mind from this is a bad stock to this is an okay stock to actually this might be a really cheap stock. And that little dink, there is a pile of overhead supply, and that's what I'm worried about. That's why I'm worried about it. But dink in here, and it changes the whole complexion. It changes the market thinking to, is this turning around? Is this cheap? It's a bit like that Domino's one. So if I had it, certainly equals R here. So we're not contemplating shorts or anything like that. Equals R at the very least. And then, yeah, absolutely, I could plus R, not so much to the next demand side candle, but the next the next dink, which really is that supply side showing, and then the demand side, strong demand side response to it. And that's it, I think, for today. Yep. No worries. I'll head down to the bottom list just to make sure I haven't missed anybody else's, and I don't think I have. We're roughly on time, haven't we? Kind of end of session anyway. So let's adjourn there. We'll do just a public service announcement. I'll head back over to here. And today is the 8th of the 12th. Add 7 days will take us to the 15th. So let's do one more, because I don't think there's any point us doing one on the 22nd, is there? I think we'll be mentally in a different place by then. So we'll do one next week, and I'll give you a few more details then on the break we'll take. And the break we're going to take is we'll probably take January off more than anything to give us all a big refresh, and then start that first Monday back in February. So heads up on that one. Otherwise, ladies and gentlemen, I really need to read the disclaimer again. It's general advice. You're responsible for the stuff you do. If it all goes horribly wrong, don't blame me. But if it goes fantastically right, I'm your man. Ladies and gentlemen, it has been an absolute pleasure chatting with you this evening. All the best if you're trading and investing until we catch up again. Bye-bye for now.